Let's talk about the impact of the current macro environment, how that's impacting on bank. We've seen higher oil prices, and for Nigeria also we've seen higher external reserves. But for you, what would you say are the most positive for the banking industry?
Well, I'd focus on three key areas. I'd focus on oil prices. I'd also focus on the sort of growth we've seen, as well as how interest rates have trended in the year so far and the expectation for the rest of the year. So first of all, for oil prices, it has a positive impact on two fronts. First of all, it helps with revenue generation for the government and potentially spending as well, which has its positive multiplier effect on the broader economy. And then from the asset quality for the banks, it has positive impacts on the basis that with higher oil prices, or at oil prices at current levels, the expectation is that the cash flow for the oil and gas borrowers, who actually represent a significant portion of current loans, improves. Okay. And this also helps them be able to better service their borrowings. So we have banks having as much as a 34% exposure to the oil and gas sector, and we know that it's been a problem one for them in the past year. Actually,
a couple of years
actually. So you know, with prices enabling them better service their debts, we expect that asset quality, at least for that sector, improves going forward. Secondly, for growth, the growth that's been recorded recently, it's weaker than the expectations, but it does present some opportunities for the banks from a lending perspective. That said, because a lot of the growth is again led by the oil and gas sector, which has seen
traditional sectors, oil and gas, power. I'm not sure about power. I mean, how much exposure banks want to have to power right now?
It's one of the more less attractive ones, actually, for the banks now. But just to go back to my earlier points, because the non-oil sector performance has been underwhelming, the expectation is that the banks remain selective in who they decide to lend to. And what that means is we see more competition for the bigger corporates, such as multinationals, as well as businesses that sit within the value chain. On that note, I'd say that we do see some loan growth opportunities for the banks. Banks are saying they expect to achieve 7 to 10%. But again, because we expect
that is still conservative, because I mean, I speak to banks use, and that's what they tell me. Many haven't had a figure above 10%, so that's still, I'm thinking that's still conservative, and even 7% is very conservative. Actually.
It is, but I think I'm inclined to think that it might fall below those levels, and that's because again, the universe of people that they can lend to, or rather of entities that they can lend to, is small, because they have to be very careful with the sort of risks that they take on in such a delicate environment. So for that reason, we do see some opportunities, but like I mentioned as well, we expect that they'd be very selective in how they choose to lend.
I think we can agree that, I mean, it's going to be just the traditional sectors, oil and gas, as it were. But, you know, I've spoken to a couple of them since the beginning of the year, and they tell me, you know, we're going to dabble into agriculture. We see opportunities in agriculture, retail space, that's still huge for both the tier ones and especially the tier twos, which is in their own space. But so I'm thinking it's still the status quo in terms of, I mean, it's predictable where these banks are going to go fishing for good credit.
Yes, and I mean, even so for agric, for instance, there as well, I expect that they'd be selective, probably focusing on borrowers that have some ties or some guarantees from, say, the CBN, for instance, maybe through its anchor borrower program. So yes, we do see some opportunities from the improved macro environment for the banks.
What about risk outlook? I mean, we've seen some stability in the currency market. CBN has been able to provide ample dollars to the market. We've seen some pressure at the INE window, but it looks like CBN has been able to get a handle of that. But then we have political risk, you know, in the mix here. So, but what is your outlook in terms of how these indicators play out? Currency on one side and politics on the other hand.
So for currency, I believe that the environment now is a lot more supportive of the Naira remaining stable. I mean, all prices are higher, like I've talked about before. And that has allowed the CBN to also build up or accumulate reserves to potentially support the currency if they need to. So I'd say that that risk is much lower now than it was a year ago, very much so. And I mean, the same well, that's the same sentiments that the banks really express. But nonetheless, there's still risks. Like you mentioned, recently we've seen some pressure in the INE window, and that's consequent of the risk off that we've seen in the broader emerging space and investors trying to diversify away from markets such as Nigeria. It's possible that, I mean, we've seen a correction in a bit of an improvement in the last 2 days, but it's possible that we see a reemergence of those pressures, and that
as
could
we
put
move
more
closer into the election
especially because
cycle.
of elections.
Okay.
So that could put more pressure on the FX front. But like you mentioned as well, the CBN does seem to be very committed to keeping the Naira relatively stable. And we've seen that play out in the last couple of weeks with the CBN pumping in more dollars into the INE window with more pressures on the demand side. The reserves as well is also supportive of whatever initiatives that they plan to take to
absolutely.
support the Naira.
Let's talk about tech. I mean, how that's helping banks revolutionize, if I can use that word, their banking processes. Now, banks are becoming more customer-centric, customers demanding more personalized services, and technology is helping them to do this. And many of them, a couple of them tell me that in terms of revenue streams, they're hopeful, that are more optimistic about revenue streams from their digital banking. But what's your outlook or thoughts on that?
Well, I do think that it's very much value adding to the sector. Although I think that the impacts will be more long-term as more adoption is implemented and as more progress is made with improvements to processes. Nonetheless, whenever these processes are fully implemented or adopted, what I expect to see are things like lower cost of acquiring new customers, for instance, as well as higher penetration for retail customers, which potentially could imply deposit growth or even lower funding costs.
Well, the
banks.
fintech guys are also have also dabbled into that market. I mean, playing that, should I say, the middleman or offering services, that particular kind of service where, via your mobile phone, you can do this kind of things that banks already offer. So I'm thinking, is that a market that the banks will struggle to get? I
think that they understand that there are a lot of complexities and there are lots of players that they're going to need to either compete with or partner with. And to that regard, from the feedback and also what we've seen, what they're doing is either trying to develop their own competencies in-house or partner with already existing relatively strong fintech entities.